I don't think it matters. I think you have to look, if you are not an ETF investor, but a regular stock investor, you have to look company by company at the prices that you own them at and where they trade right now and make decisions. Do they stay? Do they go? Do you add more? Do you reduce? I think that is what you need to do.
So, Michael, with that in mind, it seems as though that's a recurring theme. There's a good amount of uncertainty out there about what investors should be doing. What are your clients asking you right now, and how are you advising them? Is this the time to buy on dips, or should they be lightening?
I think it's time to buy on dips. I think when you start to see the markets exhibiting the type of volatility that we are seeing when the United States is still really the best economic story in the world right now, I think that it's time for you to have a list of stocks, and when those names dip down, take advantage of those dips. I think that there's a big overreaction right now based on headlines. You know, Dom, I want to make a comment on your lead-in about how there might not be any negotiation in September based on what the president said this morning. This is my take. I think that every negative statement is part of the negotiation process. I don't think it means that there's not going to be a deal. I just think that's part of the negotiation process. Maybe that's a bit half full in perspective, but I think that's really going to be the case. There's going to be a deal in time. It might be smaller, but there will be a deal, in my view.
So Kim, I mean, Michael brings up an excellent point here. We've been driven so much by headlines out of the administration, out of the Chinese. Is it all in the end noise? And if so, what exactly should investors be looking to do if they are not trying to be as headline driven as we are currently in the markets right now?
Right. Well, I'm going to answer your question, but it's going to be a little on the oblique side. First of all, what is your timeline? I think if we look back 5 years from now, this is going to be a blip. But when you're in it, these look, you know, like momentous moves, right? So I think, what is your timeline? You have to answer that first. And the second thing is what is your objective? If your objective is to try to make your portfolio not ride the wave with the markets, you're in the wrong vehicle, because your, the total portfolio value will go up and down. So that being said, I agree with your guest. You know, we don't know what the future is. We have to assume that we're a globally connected economy and that we will get deals done. And it's going to look a little bit different. There's going to be winners and losers. But you need to look at it on a company-by-company basis with a long enough time horizon, and that will make you a winner.
Okay, fair enough. So nobody has a crystal ball here. We get that. But we have a sense of the overall macro environment right now. Michael, you spend a lot of time looking at putting portfolios together for clients. What are you buying, then, on these particular dips?
We're buying tech. We're buying names that have been beat up. There's selective financial names, I think, that are opportunities. We're looking at dividend names. You know, there's been a rotation, as you know, away from high-growth names towards staples. And some are saying that staples right now are expensive. But you know, you're getting a 3, 4, 5% dividend. You look at the 10-year Treasury right now is at 1.7. Stocks start to look pretty good at this price. So, you know, the time horizon, as your other guest said, I think is important. But I also think you look at current cash flow. You look at what are you going to make now. If I tell you can buy an asset, and that asset makes nothing in terms of capital appreciation, but gives you a 3 or 3.5 or 4% yield, that is a pretty strong appeal if the 10-year Treasury is at 1.7%. So those are the kind of names you want to structure into a portfolio strategy. And more specifically from an EM standpoint, emerging markets, I'd be pretty light in that area. I know that some are saying that it's just inevitable, it's going to bounce back. Yeah, I mean, everything eventually bounces back. I just think the risk is too great, particularly given the tenor of the conversation happening right now in the media and with leaders.